Welcome to BDO today. Sorry for this crack at dawn start. I had the advantage of my cat throwing up at 5 o'clock in the morning on my bed, which got me up. As an alarm call, I don't recommend it. I'm Don Bortry. I head up the charity team here at BDO. Again, very big welcome to you all for getting here. And a special welcome to those who perhaps used to frequent offices somewhat to the east of us, in Aldersgate, with Moore Stevens. Now we are one firm. It's great to welcome you here as well. Also great to welcome Heather, who is at the back, who I'm just wondering whether she's going to be here. So Heather, who leads a lot of the charity work, is with us from, many of you will know, from Moore Stevens State. So good to see the combined team here today. You should all have copies of an agenda of what we're going to work through in the next hour or so. Included with that is the schedule of events going on over the next 6 months. If some of your usual contacts aren't here, you'll see on that, that's because we're exhibiting at the housing conference, and that overlaps with this event. We also tend to print things in the least legible font size and colour. So if you've got no idea what the dates are on those events, don't ask me, because I can't read them either. Find someone younger than me. We are going to be moving at quite a pace in a minute, so I'm going to ask that we don't do questions as we go along. That's because we want to cover 2 or 3 topics quite quickly and then give Mike plenty of time from the Commission. We're going to aim to finish the formal part from the front around about 10 o'clock. Do I mean that, or do I mean 9:30?
You mean 9:30.
Thank you so much. Yes, around about 9:30. And that gives us half an hour or so for questions in plenary or networking, however you want to use that time. Just also a reminder, Chatham House rules, so anything that is shared here, when we take it away, we don't attribute it to any organisation or individual in a way that it can be identified. Otherwise, we should feel free to feel fairly candid and open with each other. Now, I've introduced Heather from the back. We'll introduce the speakers in a minute. There's one person I do want you to meet who has joined us since the last time we run the summit at one of these events. Where is she? Jill. So this is Jill Halford. Jill's joined us to help lead the charity team based in London. Jill's going to be speaking in a minute. So this is a chance for you to see Jill, see what she looks like.
I'm all yellow, so I stand out.
And this is going to be a very short interview, Jill. So
I don't know what it's going to
ask you 2 or 3 questions. So this is just a quick fire round. Coke or Fanta?
Fanta.
Fanta. Ooh, interesting. Cats or dogs?
Oh, tricky. Both.
Ooh, interesting. Snowboard or sun lounger?
Oh, snowboard.
Snowboard? Oh, I thought you'd go to sun lounger. Right. And there's equally quick fire, but about 15 seconds. You joined the firm from PwC a few months ago. What are your hopes for your many years in the charity?
I'm very excited about the merger with Moore Stevens. I think that really kind of escalates kind of a really strong position that we have at BDO and really puts us as the top charity auditor. Which is fabulous. I didn't know when I joined the firm that we audit more of the top 200 than any other firm.
Sneak that in.
Absolutely. So I'd like to make sure that we, 1, maintain that, but 2, grow that as well.
Good stuff. Thank you very much. And you'll be up here in a minute.
I am.
But first, it's Yona, who needs no introduction. Sadly.
Thank you.
Sorry, I'm used to it by now. Right, great. So between Jill and I, we're going to cover the first part of the session this morning. I'm going to look at serious incident reporting. Just a quick refresher and a reminder, but actually the Commission have now issued a table with some good examples of things that you do report and things you don't have to report. So we'll just do a whistle-stop tour through that. I'm then going to do some year-end reminders. For those of you who've got March year-ends, this is a good opportunity to take stock and think about things that are going to come into your accounts for this year. Jill's going to cover regulatory updates. I'm going to carry on with Liz going through some tax updates as well. But as Don said, quite a pace to make sure that we leave plenty of time for Mike's presentation as well. So serious incident reporting, you're probably all very, very familiar with us talking about the requirements that you now have to consider whether serious incidents are happening within your organisation, how you become aware of them, and your reporting responsibilities in regard to them. Very helpfully, in October last year, the Commission issued an update to their existing guidance, as I say, with a very helpful table of things that you needed to consider that would be required. Now, it's really important because this is not just about actual incidents, it's about alleged incidents, and they refer to things being significant in the context of your own charity, but the wider sector as well. So there's a really strong focus on issues which might be considered to be reputationally damaging to the sector as well as to your own organisation. Clearly, post-Oxfam, the revisions are now focusing on safeguarding issues, and particularly those that might be within a network or confederation arrangement and overseas organisations that you work with. It's fair to say that when the Commission has been looking at tracking the volume of incidents that they've had, there's been a big spike over the last 12 to 18 months. So, I'm sorry, Jill's going to come back to this slide in a minute because it obviously relates to our responsibilities as auditors. But just a quick opportunity for you to have a very brief discussion with your neighbour. So question one, there's an attempted fraud by a member of charity staff, but it's been intercepted by your own internal financial controls. For 15 seconds, turn to your neighbour and come up with a view as to whether or not you think this is a matter that you should be reporting to the Commission as a serious incident. So, without Mike turning around to see, so you shouldn't feel inhibited by what the Commission actually think you should be doing, please show me a show of hands if you think you should be reporting this incident to the Commission as a serious incident. Okay, well, I'm not going to tell Mike how many people that was. The answer is yes, you should be reporting this type of incident to the Charity Commission. Okay, so probably a little bit of food for thought there in that respect. The second point here is something that did happen in a conversation that I had with a client very recently, not just about whether something should be reported, but when it should be reported. So this was a fraud that had been identified. There was reasonable evidence to suggest that there had been something that had happened, but the charity was still going through an investigation. So who thinks that you should be reporting this as soon as you become aware and you're reasonably sure that that a fraud has been committed? Fabulous. Great. Thank you. It's not the case, as with the conversation I had with a client, that you can wait until you have finalised your investigation, you've concluded, you may have also reported it to another body. That is irrelevant. You need to tell the Commission straight away and not wait until the end. And I still worry that is perhaps a view that maybe some company secretaries may have, but actually we'll deal with it when we know what the answer is, then we'll tell the Commission. Three other things here I just wanted to raise. These have been taken directly from the table that the Commission has now provided on incidents that need to be reported or not reported. So just quickly whizzing through those. So allegations of abuse, but no harm to charity's reputation. That's one of the examples that the Commission has given as something that you don't need to report. The other two, so allegations of widespread bullying and something which is happening within a wider context in terms of a federated structure where the charity's reputation is put at risk, that is something that needs to be reported. So if there's anything within that that sort of looks and feels a little bit unfamiliar to you, it looks like this. There's a 6-page note that goes with the guidance that gives you some food for thought in terms of identifying the things that you should and shouldn't be reporting. So quickly going through some other year-end reminders. So again, you're probably very familiar with the existence now of the Charity Governance Code, and you're probably working through it and thinking about how you apply it. Some recent evidence suggests that over 50% of charities have now, larger charities have now adopted the code formally, which is obviously fantastic news, but there's still some work to be done. What we wanted to pick out here is a situation or a couple of situations where perhaps you've gone through the process of looking at how you apply the code and have identified some areas where you don't apply it. And there are probably many genuine reasons why that's the case. So this particular charity is in the public domain, Roundhouse. they set out in their trustees' annual report just a little bit of background around the things that they haven't applied and the reasons for it. And we also found the RNLI, this is illegible, so what I've done is just provided the example. So the RNLI have also provided a brilliant narrative in their trustees' annual report, picking out some key areas where they don't apply the code and the reasons for it. So again, it shouldn't be something that you shy away from. If by doing your own analysis of the code and how your charity applies it, if you do find some areas where it isn't appropriate, it's not something to shy away from in terms of talking about it in your public document. Obviously the Commission are really enforcing the fact that the code is something that we all should be aspiring to deliver and work around. It's not something that's nice to have anymore. So before I go back on, actually, I should have gone back to the other slides. I wanted to bring Jill into the conversation around the matters of material significance, because there's some really interesting developments in terms of the way auditors are dealing with this.
Yeah, so as you will probably know, not only have trustees and management got responsibilities to report to the Commission on serious incidents, we as external auditors also have the obligation to report matters of material significance. So I've had a number of clients over the years who have approached me, basically got legal advice, and were about to report something quite serious to the Commission, and their lawyers actually said to them, well, have you told your auditors, because they also need to make a report as well. And the way that we like to do it is to have that dialogue, if we're able, and if there's no kind of money laundering involved, where obviously there's different rules and regulations. But we like to have that open dialogue. So we've been having lots of discussions over the last kind of 12 to 18 months as an audit profession about, again, what to report, when to report it, and what does during the course of the audit mean. And we've been consulting quite heavily with the Charity Commission to make sure that we're providing the information that they need to perform their regulatory duties as well. So I think if you are thinking about reporting serious incidents, make sure you have a discussion with the auditors, make sure that you give them the information rather than waiting to say the final audit or the planning stage of the audit where we're asking the questions. It's just good to keep that kind of open dialogue, and obviously there will be complete confidentiality as well.
Thanks, Jill. Thank you. Just a couple of the year-end reminders. So if you have a defined benefit pension scheme, you may be aware of something called GMP, which came about because of a court case late last year. There's lots of words on these slides, but basically if you were contracted out of a salary-related basis between 1990 and 1997, there is a risk that the underlying value of your liabilities could be going up as a result of GMP. So if as part of your year-end audit process you are familiar with dealing with actuaries, it's something to be having a good conversation with them about now, so that you can plan for the impact of a change in that underlying basis of calculating the liabilities. So the initial estimate when this came about was that it could increase liabilities between 3 and 5%, which for some charities could be quite a material amount. So definitely one to have on the radar. Something that also came up just from various discussions that I had with clients recently, and I thought it was worth flagging, is we're probably all familiar with, if you have investments, that you need to disclose separately the cost of investment managers' fees. It sort of came to my attention that there's quite a lot of situations where these fees are quite invisible because they're wrapped up in maybe a unitised value of an investment fund. And the SORP is very clear that where you can't easily access those investment management fees, you shouldn't seek to try and gross them back out. But it is clear that there's not a consistent basis where investment managers do charge fees, and therefore you can sometimes end up with a slightly distorted view. So if you have a very large portfolio, some investment managers invoice you directly, others roll the cost up as part of their transaction fees. You could end up with a situation where what you're showing is a little bit distorted. And my challenge is really, how do you know how to benchmark these fees if you were to go out and tender the services? So maybe just something to think about if you have a big investment portfolio. Very briefly, just wanted to mention that the law firm BWB are currently working with a number of charities to ask for some further investigations to be done around whether there'd be a benefit to the rules around trustee investment duties being revisited in light of the desire for many charities now to think about not just their financial investment policies, but how they ethically invest. So if you're not aware of that, the BWB website has got details of the coalition that they're getting together to think about how this could be reviewed again. In terms of pure technical accounting, the only thing that's changed since we last spoke to you is the information sheet 2 that's come out. But this is really only relevant to the subsidiaries, and this has come about in order to try and clarify from a subsidiary perspective the gift aid accounting rules. So if you don't have a deed of covenant in place at the moment, you need to think about how you apply this, then definitely go and have a look at the information sheet, and it will talk you through various scenarios. Finally, where are we on sleep-ins? So this is the situation where social care charities provide staff working overnight. There has been a long-standing issue, really a MENCAP at the front of it, around whether these sleeping arrangements constituted working in terms of calculating the national minimum wage. So this time last year, in July last year, we thought the issue had been put to bed. The appeal court had ruled in favour of the charities, so we thought the issue had gone away. Just one to have on the radar is that the Supreme Court have now said that they will look at it again, not expected to do it until October 2019. So again, it's put the sector and those charities for whom this is very relevant sort of in a bit of a difficult situation again, thinking about what the outcome might be. Very helpfully, gov.uk, HMRC's website has got a really helpful YouTube video that takes you through how you would calculate the minimum wage and the scenarios where somebody's sleeping in and they would be required to be paid in situations where they wouldn't. So I thought that was quite helpful to alert you to. And the final thing I think I was going to talk about is the fundraising regulator. They have recently announced that they're going to be flagging the names of organisations that they are looking into. So if you're registered with a fundraising regulator, it's something you might want to be aware of. And that was my little doctor through.
Thank you very much. Can everyone hear me at the back? Mic's working. Yeah, great. Smashing. So something that I was really keen to cover was reserves and going concern. Now, I've had lots of discussions about reserves with a number of trustees recently, and in my old role, I was known as the going concern queen. Which I don't think says a lot for the sector at the moment, but I did go through, I think last year, about 4 going concern panels because of the financial state of some of my clients, unfortunately. And I think they're heavily interlinked. So good discussions that I've had with trustees have been around not looking at reserves policies in isolation, but really thinking about where the organisations are, in their life cycle, where they are with their strategy and what they want to do, and therefore do reserves fit into that. And also what management information we're getting up to the exec team and then also to the trustee board to be able to regularly monitor the reserves position. And one of the things that I think is quite interesting is the risk appetite of boards, because that obviously feeds into kind of what they want to do with strategic direction, but also what level of reserves they would like to hold. So I think it's been quite a topical debate, and I know the Charity Commission released some research in November last year, which I'm going to just touch on, hopefully not steal Mike's glory. I'll touch on it very briefly, stop it there. One of the key things for me in setting the reserves policy is really looking at a balance between how you service your current beneficiaries, but also keeping sufficient in the bank to be able to make sure that you are sustainable and can also service your future beneficiaries as well. And that balance, I think, is really key and can often be quite tricky because, as we all know, a lot of charitable organisations don't just do one thing. So I had a chat with an organisation relatively recently that is running care homes and also ramping out research. So 2 very different parts of their business and 2 very different drives on reserves as well. You know, what's the long-term commitments that they've already made, especially for research grants, and how does that reflect into their reserves policy? Now, for a number of years, Don's been running an exercise on reserves, looking at the top 50. I think 2017 was the last time you did it, Don?
Every 2 years.
Sorry?
Every 2 years.
Every 2 years, I'm sure, yes. I would do another one. Watch this space. And I was quite surprised by one of the key results coming out of the last 2017 review, which was that the top 50 UK charities, on average, had only 3 months unrestricted expenditure cover. Now, we all know when we're having discussions that a lot of people will use 6 months, and I'm often asked the question, how much is enough? And is it 6 months? And I did an exercise a few years ago, actually, with one of Fiona's clients, and I said, no, 6 months is not enough. You can't just put 6 months in there as your reserve policy. You need to do a calculation behind it. You need to really understand the business, why are you holding certain types of reserves. And so I worked with the trustee board and management to basically go through a big exercise. I'm a mathematician by background, so I like a lot of logic, I like an equation, and we worked out all of the different income risks, and we worked out, what they want to hold them at, and it came out at 6 months. It was awful. It was absolutely awful. I was so disappointed. So it can be 6 months, but it's really important to go through that kind of detailed analysis. So this, as I mentioned, was the Charity Commission's research piece that they did over 2018, published in the autumn in November. And really what they did is they tripped on, so they looked at over 100 accounts, I think it was 106, and they were really looking at the reserves policy, the disclosures around reserves, and actually had the charity calculated what they said they were going to calculate in the reserves policy. And this little graph here on the right-hand side, as you look at it, did show some improvement from when they last did a similar exercise. But there was still 8% of charities that weren't even mentioning reserves policies in their trustees report. So while 92% looks like a good figure, I'm not sure that should be something that we're celebrating. And you can see that at least a third of charities didn't meet the legal requirements just on disclosure. So that kind of, for me, gives me an indication that our organisations are all charities going through the full process of reserves and really embedding that kind of, getting the value out of looking at reserves and embedding it back into their strategy. So I think the key message was that there was a lack of transparency as to why organisations were holding reserves, but also the calculation of how they got there. And one of the things that came out of the reserves was that the reserves research was that there was a lack of understanding. And again, it's a generalisation, and I'm sure a lot of people in the audience will have been through similar exercises and looked and studied CC19 in quite a bit of detail. But there was some trustees, I think especially, who didn't understand that it wasn't just the level of your unrestricted reserves that your balance sheet. So you do need to think about kind of what have you got tied up in tangible fixed assets that you're using as part of the charity's operations. You do need to think about any program-related investments, which I know not all of you will have. Designated funds that you've designated for a really true purpose, and actually, that may be to do with kind of research commitments, which is the next point as well, or that you won't be able to fund going forward. So there's some real key things to make sure that you're considering as you're going through your reserves calculation and understanding what are the free reserves or true free reserves. And I think one of the things for me is, having worked with a number of organisations that have got into financial difficulty, is really understanding how you've got there, but also before you get there, looking out kind of 3 to 5 years, can you see it coming? So I worked with one organisation last year who, over a 3 to 5 year period, has been making recurring deficits, had tried to readdress it as kind of salami slice and tried to cost cut. But basically what had happened is they used their investment portfolio and they moved from being quite a mixed balance sheet, quite low risk, decent investment portfolio and a lot of fixed assets, to really running out of cash and therefore having to sell some operational assets to fill that gap. And I remember the chair coming to me and saying, we didn't make that conscious decision. We knew that we were setting deficit budgets, but we thought we had enough in reserves to cover it. But I'm now faced with a balance sheet where it's completely illiquid, and that was not a conscious decision. So I think, obviously there's a number of factors to that. So when I'm out talking to trustees and doing reserves exercises, these are some of the things that we talk about, and obviously not all of these will be relevant to every charity. The most common, I think, is income risk analysis. So I get a lot of clients that will say to me, well, we've looked at all of our different income streams, we put a risk rating on it, this is where we think we've got some risk, and therefore we want to cover that with our reserves. The second one, we see sometimes, and we often see this where organisations are getting into financial distress. Do they know what their cessation reserve is? And I think even if you're not in financial distress, this is a really good exercise to do. Do the trustees understand what their red line is? And are they happy that they've got sufficient in reserves and in the bank and covered by assets to be able to continue? And if they do decide to drop below that red line, then that's a big risk that they're taking. Working capital reserve, we're seeing a lot of funders, especially institutional funders, government, now funding in arrears, payments by results. What does that mean for your working capital? Can you fund that? Can you pre-fund that? And again, that could be something that you're looking at, not just covering it in your free reserves, but again, the makeup of those reserves. Are they liquid enough to help your business in the short term? Opportunity reserve, we often see this classified as designated funds. Do you have sufficient in reserve to be able to invest and to be able to kind of, innovate? So obviously something to think about. And then finally, adversity reserve. And again, not that often used, and often will kind of come into one of the others too. So some of the things just to think about as you're embarking on your kind of annual review in some cases of the reserve policy for your, say, March year end. Now, closely linked to reserves policy is obviously going concern. And I often get, and I must say I'm a trustee of a number of charities as well, so I've had this similar thought process myself. Are we going to get this review? So just to reiterate, it's not just your auditor's responsibility to sign off on going concern. As trustees and exec boards, it very much is your responsibility to make sure that you're happy with every assumption that's going into the accounts, but I would say this is the most important one. Where I see great practice in the sector is where charities are constantly monitoring this, they're testing it, it's built into their financial reporting. And then towards the year end, we obviously see a number of organisations approving the accounts and receiving a paper from management. So looking at least 12 months out, summarising why management believes that this organisation is a going concern. And I think, no matter what level of reserves you're holding, that is a good practice to get into. You should be giving confidence to your trustees as to why you believe as management, the organisation is a going concern. And things to consider would be the free reserves like we just talked about. It would also be kind of cash flow forecasting as well, commitments in any loan covenants if you've got external funding, and potentially scenario planning as well. And where I see this working really well is where trustees are robustly challenging those assumptions and doing that scenario planning for themselves rather than waiting for the auditors to do it. So a bit of good news on World Happiness Day is that the FRC, as I'm sure you will be aware, you've seen lots in the press, the FRC is potentially changing. There's a lot more regulation on auditors. There's going to be a huge amount of change, I would say, in the next kind of 12 to 18 months. And one of the things, just to kind of conclude this session, is around the FRC are going to put more pressure on us as auditors to robustly challenge you. So I think if you're already doing that challenge yourself, that will help. And then finally, can I just have a show of hands as to who receives and relies on legacies? Quite a few in the audience. So you've probably already picked this up, but for those that haven't, February, so only last month, the MOJ gave notice to our friends over at Smee and Ford. And for those that don't know, Smee and Ford have a contract with the MOJ around examining wills when probate's given, and they give the information to the charities of legacies where they've been named as a will. So a really important source of information, really important for two things really. It's for linking back to what we were saying about reserves and forecasting and cash flow. There's a huge amount of income coming through that source. So that is incredibly important for financial planning, but it's also important for fraud identification as well. So, do you know what you're getting? And therefore you can chase it and make sure that you've got completeness of income. In 2017, there was over 122,000 notification requests to charities. And it was estimated that about a third of those were unknown to charities until Moving Forward tipped them off. So charities are very reliant on it. I should probably declare an interest. I'm the treasurer of the KIVO. So we're part of the working party of the umbrella organisations that are trying to assist with the replacement of Moving Forward. But I think it's key to say at the moment that there will be a period of uncertainty. Their contract is due to finish in July. And at the moment, I'm not quite sure around the kind of transition planning there. So we are very hopeful that there will be something in place, but at the moment we're not quite sure what that's going to be. And again, on World Happiness Day, the sceptic in me says that the cost for us is going to go up. It might not do. Maybe I'll be proven wrong, but possibly. That's all I want to cover here.
Okay, hi everyone. I just got a little bit of time now to very quickly take you through some recent VAT, employment taxes and direct tax updates. If you would like to hear about these things in a bit more detail, plus some other bits, then please do come along to our tax update in May, which I think you've got details of on one of the flyers you've been given. I'll be around at the end if you have any questions. I think you've got my contact details as well, so please do feel free to follow up with me as well. So I'm going to start with some VAT updates. Making tax digital, first of all. I'm not going to say too much because I think we all know this is coming, but one recent update that might be of interest, if you are still searching for MTD software, then HMRC has recently launched their MTD software choice as a viewer. So they've collected together various products designed to assist with compliance with MTD that HMRC have checked over, and they are happy that the software meets all the requirements. And so they have listed these on our website. The link is probably a bit small, you may not be able to read it, but if you just Google it, HMRC MTD Software Choices Viewer, you should be able to find that quite easily. A few other VAT updates very quickly. So there is a reverse charge coming in from 1st of October this year for construction services. That's new. HMRC, after some debate on the subject, have now accepted that named patient continuing care funding, so private hospices, is outside the scope of that, so that's good news. HMRC continuing to challenge zero rating charity advertising on social media, and essentially HMRC's view is that where the advertising is sort of targeted towards a specific demographic or specific group of people, that cannot be zero rated. That's their view. A couple of changes to MOS, Mini One-Stop Shop, from 1st of January this year. A new annual threshold for the total supplies of digital services that you can make to EU non-business customers in a year. And further updates, businesses that are not established in the EU but are registered for that locally in an EU member state will be allowed to use MOS where they are selling digital services to EU non-business customers. Finally, Brexit. Not quite sure what is happening with Brexit at the moment, but HMRC wisely is preparing for both a deal and a no-deal scenario. So if we do manage to agree a deal, then there'll be a 2-year transition period for that. So very little will actually change until at least January 2021. If no deal is agreed, then HMRC have recently published some draft legislation intended to ensure that in that scenario, the UK VAT continues to operate as required. And again, if you Google this, you'll be able to find numerous press releases and the legislation itself is quite easily. I'm not going to cover recent cases, I don't think we have time, but CTG, the Charity Tax Group, actually has very thorough coverage of recent tax cases on its website. Off-payroll working, so employment taxes now. You may have heard of these rules, so currently operational in the public sector, and broadly the rules are designed to ensure that people working through personal service companies, but who essentially to all intents and purposes are working as employees of the organisation, contracting them through their personal service company, but they are taxed in pretty much the same way as directly engaged employees. The government confirmed at Budget 2018 that these rules are going to also be brought into private sector, and that's all sectors, including not-for-profit, and this is set to come in from April 2020. The government and HMRC are currently consulting on the details of plan reform, and they're seeking responses from people, businesses in all sectors about sort of the likely effect of the introduction of the rules on their sector and on their business. So again, if you Google search for this, you'll be able to find it, and please do submit your responses to HMRC. The closing deadline for responses is the 28th of May this year, so a bit of time still to get your responses into HMRC on that. A couple of quick updates on direct tax. So the small-scale trading exemption is going up from April this year, which is good news. So this is the top limit on the amount of otherwise taxable income that a charity can generate without actually suffering a corporation tax liability. And the sort of very maximum threshold for this is going up from £50,000 in a year to £80,000. So potentially avoids the need for a trading subsidiary for a little bit longer, which is good news. And also going up from April this year are the donor benefit thresholds for gift aid. So the value of benefits that you can provide to a donor in return for their donation and still be able to claim gift aid on that donation. So the current thresholds at the top, which you're probably very familiar with, and then we've got the new thresholds coming in from April at the bottom. So the middle band is going. On donations up to £100, you'll be able to provide benefits up to the value of £25, and then above £100, it's just a further 5% of the remainder. It's a little bit more generous, new system, and the main benefit, as you can see from the graph, sort of lies in this region of where you've got donations between £100 and £1,000. So under the current system, where you were sort of stuck with a flat rate of £25 worth of benefits all the way up to £1,000, it now will increase sort of incrementally in line with the value of the donation. And finally, not going to say much about this because Fiona's already covered it, but this is the sort information sheet 2 that we spoke about earlier. And I just want to mention the tax effects really of this. So there's no change to the normal 9-month rule for wholly owned subs of charities to make their gift aid payments to their parents and be able to claim CT relief in the year just ended. That's as it has always been. But where no legal obligation exists at the reporting date to make the payments, then FRS 102 requires you to recognise CT relief at the reporting date, so potentially before you've actually made that gift aid payment to your parents. But obviously the tax charge, the sort of nominal tax charge on profit, and the CT relief that you will recognise will net off to nil, so you get back to the same position of a nil tax charge overall. Okay, that's it from me. A bit of a whistle-stop tour, but as I say, I'll be around at the end. Thank you very much.
Thank you, Liz, and thank you for this crappy clicker. So we're going to hand over to Mike, and you're using this microphone, aren't you? So, very grateful that Mike has come along. Mike probably is, you have on the handout, board member at the Charity Commission with particular responsibility and interest in all things financial and auditing. Is that good enough? Close enough. Mike, over to you. Let's just click you on. So you need that?
Thank you. Very full room. Didn't realise that when I sat down at the front. thank you for the introduction. Don didn't actually say my background is in accounting, so I'm afraid you are going to get a certain amount of financial management and bits here, but I do like to think that I'm also going to cover a bit more wide views of that, particularly since our comparatively new chairman of the Commission decided that I'd had enough of auditing, so she decided I would no longer chair the Audit and Risk Committee at the Charity Commission. She's put me in charge of the Policy and Guidance Committee instead. So you can blame me for the next 18 months for the policy and guidance that we issue. So I won't put my email address up. I always feel on these sorts of occasions as well I should apologise for not being the Mike Ashley. We expect you to come along here and receive a presentation from a beer-swilling person who owns a football club. You're going to be sadly disappointed. I will whistle through this and take some questions at the end, but I thought it would be helpful just to start off by looking at what it is we are faced with, because I never cease to be amazed by the numbers. There are something like 168,000. The last time I did this talk was about a year ago. I think I had 166,000. It keeps going up. People keep wanting to register charities. There are 168,000 charities on the register. There are a few things that probably should be on the register that aren't. I came across one of those the other day when somebody asked me to be the independent examiner of one of our local churches. And I discovered that it had been breaching the threshold for registering with the Commission for the last 4 years and hadn't got around to it. It will teach me to take on those sorts of responsibilities. So I'm not trying to sort that one out. Anyway, but 168,000 charities, they cover a huge spectrum. And one of the things that I am passionate about trying to, during my time at the Commission, get us to do better is to start to segment the portfolio a bit, because I do think there are those charities where we really do add value in terms of the regulation and the guidance that we produce. And frankly, there are a number of bodies which are forced through charity law to register with us, or in some cases volunteer to register with us, where I'm not convinced the Charity Commission is the best vehicle for regulating them. One example would be the number of scout groups that we have on our register, where frankly I think the Scout Association does a much better job of regulating them than we do, and if we could come to some arrangement where we push that more in the direction of the Scout Association, the better. We are faced with the prospect in a couple of years' time of adding all the church councils or the local PCCs onto our register, because they cease to be accepted charities in 2021 as the law currently stands, although we are looking to see whether we can persuade the government to extend that timetable a bit, because we have no desire to register a whole bunch of church charities. King George V, in my view, has an awful lot to answer for in terms of the population of our charity register. He came up with a bright idea of, when celebrating one of his jubilees, that every village should set aside a playing field for the use by the local populace. The number of King George V playing field charities that are on our register goes into the hundreds. Anyway, enough of that. There are 700,000 trustees looking after these 168,000 charities. A number of them doubled up, which is why there are 953,000 trustee positions, but that is a hell of a lot of effort. And it understates the amount of voluntary effort that goes into charities by some margin. If you look at the number of people that we calculated actually work for registered charities on a voluntary basis, it's something like 3.7 million in this country, which is an incredible number. As I say, I never cease to be amazed by that. So that is what we're faced with trying to regulate, and we are a small organisation, and therefore it is a challenge. Well, shortly after our new chair joined, it was time for us to do one of our periodic strategic reviews, so we have done, and we decided to try and set out a purpose for the Commission, which it incorporates clearly our statutory objectives, but it's designed to go slightly above and beyond our statutory objectives and try and say what it is we're about. And more importantly, we are trying to, and up there, I'm not going to read it out, but more importantly, we are trying to live by that. So every time we do something now, we try and sit back and say, is this actually helping us achieve what it is we are setting out to do? And if it isn't, we shouldn't be thinking of doing it, or we should be thinking of doing something in a different way. And the follow-on from that is we've now set out our strategic priorities for the next 5 years, and these are the 5 strategic priorities that we've got. And work is currently underway to actually translate those into a business plan for the next year and some more business planning for years on beyond that. Our chief executive describes it as not being an heroic strategy, but it is a challenging one. And it's challenging because we are, quite frankly, struggling in terms of meeting our basic requirements today. We are, as I say, a small organisation. The Charity Commission's funding was cut about 10 years ago quite dramatically. It's come back somewhat since then. But actually, at the same time, along with, I suspect, a number of charities in this room, as well as struggling with falling income, we are struggling with increasing demands on our services. As I say, the number of charities that are trying to register at the moment is at an all-time high. So, I'm not trying to present all the excuses, but please bear with us if things are dealt with not quite as speedily as you might like. But what do these strategic priorities mean? Holding charities to account. Clearly, it is making sure that they meet their legal obligations, but we are trying to do something more than that. We are trying to think about not just what do charities do, but how they go about doing it. And again, in this modern day and age, and particularly with social media, particularly with the angst that people have when they feel separated from whatever it is they're dealing with, whether it's a big organisation or whether it is a large charity, people feel slightly divorced from it and slightly sceptical of it these days, and social media breeds that. Therefore, reputation is probably more important today than it ever has been. And a lot of reputation is to do with how people go about things. I did check, and I hope that somebody hasn't joined the party late, but I did check whether there was anyone from Age Concern here, because I was going to use that example, and I wasn't going to do it and spare their blushes if they were here. But I mean, you expect a charity which is dealing with the aged to have products which are demonstrably helping the aged, and certainly not ones which might be criticised as not being to the best interest of the aged. So there's a lot about how a charity goes about what it's doing, and does it live up to its purpose? Does it actually walk the talk? We talked a bit about safeguarding, and safeguarding gets talked about in terms of beneficiaries, but increasingly it is safeguarding in terms of anyone the charity comes into contact with in a regular basis. So those of you who are running charity shops will know we are very concerned if there are allegations of abuse of people, particularly youngsters, who quite often will volunteer to work in charity shops. So it's beneficiaries and others that the charity comes into contact with. We will deal with wrongdoing and harm. That is a key part of our overall statutory objectives. It is a key part of us helping to preserve the reputation of the charity sector as a whole. We are going to try and be less reactive. I like to think we were slightly ahead of the curve, not quite as far enough ahead of the curve as we wanted to be in terms of the safeguarding issues that arose last year, because we had actually issued guidance at the back end of 2017 on protecting vulnerable beneficiaries, particularly in overseas charities. But nonetheless, we need to be smarter at that, so that is one of our key objectives, to try and get data to enable us to do that. And that is a technology game, as you will all appreciate. That requires money. We are investing, but governments are not good at parting with cash to invest with the future, particularly at this particular time of life. So it is a slow burn, not a complete transformation yesterday. We are trying to move to a stage where people do not feel that we are ignoring complaints. That is not to say that we are going to investigate to the nth degree every complaint we receive. There will be quite a lot. Indeed, going forward, there may be more, where we take a hard-nosed decision that this is not somewhere where we need to take specific regulatory action. But we are looking to assimilate more of that data and use it as part of the trend, both in terms of what's happening in particular charities and also across the sector. So we are focused on, as I say, being more proactive in terms of anticipating major issues. We're also looking to help inform public choice. We've had some debate within the Commission about how far does that take you. I do not think we are going to be trying to produce a compare the charity best buy table. That, I think, is not what our function should be. And today we do produce quite a lot of basic charity data, but it's not in a form which is easily accessible, certainly in bulk, or to share, or to compare it. So we are looking to improve that, and that is something that we are working actively on during the course of this year. And we are thinking about what further data it makes sense to collect. So there will undoubtedly be a consultation on the annual return for next year at some point in this cycle. Do not be surprised if there are one or two things in there that we add in. We're not looking to overburden people, but we do think that transparency and allowing people to make choices is good. The other thing that we are working very hard at is actually cleaning up the register. And you can all help in that. Please make sure your details are up to date. I suspect for the charities that are in this room who tend to be the sort of towards what I regard as the medium and larger end of the spectrum, it's not so much of a problem. I have to say, with the number of small charities we have on the books, actually getting them to produce accurate data is a nightmare. Tell a slight tale out of school. One of my daughters-in-law is the trustee on the Parent Teachers Association of the school where her kids go to school. So just as a matter of idle amusement, one weekend when she came over, I looked them up on the register. I think she recognised the name of one of the trustees who was listed on the register. All the rest had long since ceased to have anything to do with the PTA whatsoever. So actually just trying to keep this thing up to date is a nightmare. The other thing we are passionate about doing is producing good guidance. Again, I have a personal campaign, and I don't know whether I'll succeed. You can judge me again in about 18 months' time when my term at the Commission ends. But I do think that we need to have a bit of a revamp of our existing guidance just in terms of codifying it better. There's a lot of good guidance there, but some of it is duplicative and some of it is not easy to find. So actually putting it in a more of a framework structure is something that I think we could certainly do better. We are about to produce some new guidance this is on charities working with non-charitable organisations, so affiliated organisations. That has been stirred clearly by some issues that we've come across where, quite frankly, trustees did not recognise the distinction necessarily as well as they should have done, and where it was not evident that decisions were being made in the interest of the best interest of the charity and its beneficiaries rather than the other organisation with which they were affiliated. Suffers is slightly the wrong word because I don't think we have much choice, but it is designed to cover a multitude of different relationships. Therefore, not everything that is mentioned in the guidance is apposite in every particular set of circumstances. But the principles, and we have tried to write it as a principle piece of guidance, the principles, I think, are relevant in every circumstance. The examples and the discussion that flows underneath those principles, as I say, is not necessarily always relevant for everybody. The other thing that we have said up there, which is slightly new for us really, we've done it to a very limited extent in the past, is keeping charities relevant for today's world. So we have had limited capacity within the organisation, and frankly I think over the next year, 18 months, we're going to continue to have limited capacities. This is more towards the latter end of the 5-year spectrum. We want to try and start to shape the agenda as to what role charity should play within society as a whole, and help with your help to inform government and speak both with them and beyond. As I said, I also am passionate that I do think that in doing that we can also help clean up our own shop in terms of what it is we seek to regulate. I do think there is the capacity to cut down on some of the things that we do. The other thing I want to talk about, and it's already been touched on to some extent by colleagues from BDO, the importance of good governance and trusteeship. It is absolutely essential. It goes to the heart of everything. We can do so much as a regulator, but actually it really starts and stops with you as trustees. And I'm very pleased to see that the new Charities Code seems to be getting the take-up that it has. I'm particularly keen to see that where people do not comply with it, that they articulate why. Because there can be very good reasons. And nobody is going to worry about not having a board of 12 but having a board of 16. I have to say, I think the charity that we have got, which has got the most trustees, has got something like over 400 trustees. I'm not sure that is a good example of I'm not even quite sure how it functions, but And needless to say, it is a religious charity. But there you go. But it is vital. It's about attitude culture, as it says there. It's about whether you're putting values into practice and being transparent in terms of the decision-making that you go through and what you then say about it. I would refer you back to this. I think it's an excellent piece of guidance in terms of the essential trustee, 6 main duties. I'll run through them very quickly. Ensuring your charity is carrying out its purpose for the public benefit. Please have in mind always that is what it is. It's all about public benefit, not private benefit. Complying with your charity's governing documents and law. Again, I would hope that most charities in this room have a good clue as to what their governing document is. Again, there are a number of charities across the spectrum where I suspect they haven't the faintest idea what the governing document is. I know when my wife became a charity of one of the King George V wonderful charities in our local village, she had to actually get me to dig around in the Charity Commission to find what the governing document was, because nobody else had the faintest idea. But the one thing I would say, even for charities in this room, do look at your governing document and keep it up to date. There's a real danger, I think, with these things is they get written once, in some cases in 1870, and then they get put on a pedestal and left there, and nobody really reviews them seriously. So I would encourage you to look at that. Act in your charity's best interests. Again, recognising conflicts of interest is another one of my sort of hobby horses. I find it incredible the number of charities that do not seem to recognise inherent conflicts of interest within the arrangements they have. I remember on one occasion when I went up to Liverpool to look at some of the work the Commission was doing, and there was a charity that was looking to register, and the application had been put in by a firm of solicitors. You would have known better, but not necessarily. And this was a charity which was going to carry out a particular form of training. I can't even remember what it was. And it was going to do it through the medium of a training company, which was owned and run by the person who was being proposed as the charity trustee. And not only did he see no conflict in this arrangement, but the solicitors didn't see any conflict either. So, anyway, so please do that. Act with reasonable care and skill. Again, some people in this room will be professional accountants, auditors, lawyers, whatever. It may seem slightly perverse or actually unfair, but you will be judged in terms of acting with reasonable care and skill as to what reasonable care and skill means in your personal context. So if you are a professional, do not leave your professional hat at the door when you walk through and join the trustees meeting, because that's not what you're there for. And it is interesting why people become trustees. Again, I would hope it doesn't apply to a lot of people in this room, but I was told the amusing story of one famous personality who was approached to become a trustee of a fairly large charity, and they wrote to him and said, would you mind doing it? And they got a nice letter back from his agent saying he'd be very pleased to do it, as long as he didn't have to come to any meetings. I think he ended up being a patron of the charity concern rather than a trustee, probably much more sensible. Act with reasonable care, as I said. Manage your charity's resources responsibly. I'll touch on that a little bit in a minute. And ensure your charity is accountable, and that is, to say, more than just meeting statutory requirements. It's living and walking the talk. Financial management. Again, I think these are good questions. I'm not going to ask you to try and read this slide. I suspect it struggles from the same sorts of things as Don's literature, that you can't actually read it. And not all the questions on here are relevant in all circumstances, but many are, certainly for the medium and large size charity. The three I want to highlight in particular, onwards we've touched on. Do you have adequate safeguards in place to prevent fraud? There's been lots of work around fraud. Unfortunately, an awful lot of it is perpetrated by insiders within charities. So, there is this view that people who volunteer and work for charities are all above board and reputable and honest. Regrettably, they are the same as everybody else. There are some dishonest ones. Keep an eye out for that. Financially strong enough, which I'll touch on, and also cheating as covers four other ones. Are we making best use of our resources? And that covers the financial benefits of being a charity, use of staff and volunteers, use of property, and collaborate. And the last one, which was the topic for those of you who came along to our annual general meeting last year when we had Prince William along, actually collaborating with other charities or considering merging with other charities. Again, that's another area, I think, where the Commission would encourage charities to think seriously about whether or not they are achieving the best thing for their beneficiaries rather than just for the charity by perpetuating it as a standalone charity, or whether working with others is a better way to go. There's been some excellent examples of that recently. Rebuilding public trust. This was the survey that we do. It came out showing the major things that people want to see is my donation actually making a difference? Can they demonstrate that they are exercising good stewardship over it and that they put their values into practice? Those are key things. And it says there, admin costs and CEO salary support proxies for knowing your donation will really make a difference. That was something which Populous, who did the survey for us, actually drew out in some of the sort of discussions that they had with people who were contributing towards it. And again, I think there is a tendency that people sort of look at those sort of headline numbers, but they're not the things that really matter. Transparency in charity accounts is very important. We've done, as was indicated, we've done some surveys on that. We would say that about 70% of trustees' annual report and accounts met our basic benchmark of user requirements, compared with last year's 74, so not going in the right direction. Quite a lot of it is not providing meaningful information about the purposes and how they're being achieved, is what it boils down to. It's not necessarily the financial information, it's the commentary that goes with it. And about only 52% of trustees' annual reports met the public benefit reporting requirements, which was going in the right direction in the sense it was a 1% increase on the year before, but it's still not great. We've talked quite a lot about building resilience, so did nick a bit of my thunder, but I'm going to mention it briefly. I think there was a lot of concern when we produced some of the original guidance around reserves and building resilience. Like the previous focus of the guidance had been very much on charities need to spend the money they have for the benefit of beneficiaries, not hang on to it forever. There is, as we said, a balancing act here. And I particularly think it's important in the case where you have got beneficiaries who are dependent on the services on which you are providing, and therefore, if you like, some discontinuity in that would be important. If you're a grant-giving charity, then frankly, how much reserves you need to hang on to is a very moot point. If you are delivering a service, then I think you have got to have regard to the resilience aspects that we talked about. And so you need to set out what the policy is. You need to say what it is you're trying to do. And frankly, don't be afraid. I think there is a concern that we detect that trustees don't want to say, well, we haven't built the reserves up to an adequate enough level yet. That's fine. Can't go on forever. But, you know, to have a period when you don't have enough reserves is not the end of the world. If you have a desire to get to a particular level, particularly if you're a new charity, it's accepted. It's going to take time to build those reserves up to that level. Don't be afraid of saying so. Again, when we did this survey, and it was hinted on, I'll look at some slightly different numbers, but and I think we got a slightly better number than you having. So we got 97%. They included a reference, passing reference, to the reserves policy. We have a slightly worse number, which is actually based on the calculations we did. Less than a quarter of the charities actually got the reserves number right. So that was partly because some of them didn't include a figure at all, but a quarter of them didn't actually got it wrong. Oh, sorry, 17% got it wrong. That was all I was going to comment on. It does say there, contact us. Please bear with us that we don't answer the phone immediately. Our current waiting time on answering the phone, based on the statistics I saw yesterday for last month, is 7 minutes. So we're getting better, but please hang on in there a little bit. Happy to take any questions.
Excellent, Mike. Thank you very much. What I'm going to do is just ask Liz and Jill just to grab a couple of chairs and bring them up the front so that we can take questions. Although I suspect a lot of questions will be for Mike. As a reminder, Chatham House rules apply. Ask questions that you want I'm going to start with one, because I'm allowed to, and it sort of warms people up. And it's a comment you made, Mike, about the desire that you won't follow up everything, but nothing will be ignored. And I know a regular comment we hear from clients is, well, we put in some sort of report, we never really hear anything back afterwards. Now, I wasn't quite clear whether you were saying you will be selective on which ones you will follow up, or whether you're going to follow up everything, but it just may take time and so on.
No, okay, let me try and be clear. And I'll distinguish, if I may, between reporting serious incidents and general complaints that we will get of one sort or another.
And can I just check you can still be heard? Because
sorry.
Is that sound all right at the back?
Okay, so...
Sorry?
Okay, I will try and speak up. In terms of reporting serious incidents, certainly any charity that reports a serious incident should get an acknowledgement of the fact that it has been reported. I suspect something well over 90% of those letters will say, thank you very much for the report. Please let us know if there are any further developments of which we should be aware, but we're comfortable that you're taking the action that you need to take. And that is as it should be. So there should be an acknowledgement, but there's, quite a lot of the time there will be no follow-up beyond that. And as I say, that is what we are actually aiming to achieve, because we are really trying to seek comfort that trustees have got a grip on and know what the issues are and that they're dealing with them satisfactorily. I do find it, I was very pleased that you stressed the importance of reporting serious incidents earlier. It was one of my hobby horses last year, because I have found particularly lawyers take a very legalistic view of what should and should not be reported, which is, in my view, not the lens you should be looking at this through. And in terms of the comment on timeliness, the worst thing for a charity to find itself in the position of is the commission reading something in a newspaper that the charity had not told them about beforehand. That is the worst of all worlds, because that demonstrates, A, they didn't really understand they needed to report the thing on a timely basis, and B, they may not even be in control of the situation, and that just worries the commission. Reporting serious incidents does not worry the commission, providing it is accompanied by an explanation of what you're doing about it. So that I would say. In terms of complaints more generally, again, people should get an acknowledgement that the complaint has been received, but quite often it will not be of such a serious nature that we feel the need to take particular action, either with the charity or anyone else. So it may well be that with those, we will compartmentalise them in terms of it is data. So again, frankly, if we receive one very minor complaint about a charity that we do not feel requires any regulatory action on our part, we will thank the complainant and say thank you very much and move on. If by the end of 6 months we've received 200 complaints all about the same charity, we may say, well, okay, we need to start thinking about what we do about this. Preferably if they're from 200 different people. Well,
yes. You're 200, I guess. Yeah. Right, thank you for that. Right, the floor is... Do you mind just saying who you are and which organisation you're from, just so we all know?
Yeah, I'm Jonathan Wiggle-Levy. I'm from the Let's Go charity, which is the investment arm of the Family Foundation. We had a serious incident 3 years ago, which we reported. We found that it was a fraud within our bank accounts. I had to threaten the bank with legal action to tell us whether they reported it to the police, what the police crime number was, because we wanted to meet you reporting requirements. Now, take that forward to the anti-money laundering world we live in. Do you now, as a commission, have links with the authorities so that if we can get the reference numbers from, whether it be the bank, the anti-money laundering authorities that send them on to you, we may not be able to disclose information, but would that be sufficient to meet the reporting requirements?
Mike, can I just ask you to sort of repeat the essence of the question for the folk at the back?
Yes, it was basically whether or not if there's an incident that involves a bank account or anything else, frankly, that's been reported to the authorities and there's a police incident number, that you can use that as a reference. I think it comes back to, it's not so much the reference we're looking for, it's more the fact of an understanding that the trustees have acknowledged the situation, what they're doing about it and everything else. So it's that aspect of it that I'm more concerned about. I don't know the deep technical answer to your question in terms of whether we have sufficient links that we could make the link as to what it was. It would invariably take some effort on our part, so the more information you can provide us with, better, rather than just a number.
I mean, can I answer your question? The problem you get, and I'm in the banking industry as well, you don't get information until you get the number. So if you guys then want further information to get the trend.
Because this was something which was not perpetrated within the charity. This was outside the charity on the bank account. Why don't we catch up afterwards? Yeah, I may well not be able to answer your question, but if I can take your details, I can find somebody who can.
Very good. That sounded fairly technical. Right, we've got one in the middle there, and then we'll go over there. So.
This question for Mike. I was interested.
Sorry, can you just remind us who you are?
Sorry, I'm Tanya Selborn from Mary Curie. I was very interested in your comments that admin costs and the salary of the CEO are perceived as not sufficient to demonstrate efficiency or value for money. And I suppose my question is, what in your opinion is, or what came out as being sufficient? Because one of the things that I'm struggling with is finding measures that are objective that can easily be benchmarked to demonstrate efficiency.
I think it depends so much charity by charity.
Sorry, can you just repeat that?
Sorry, repeat the question. Yeah, okay. The question was, if it's not admin costs and CEO, what are good benchmarks in terms of demonstrating performance? I have a slightly personal view, because we've certainly looked at it in the Commission in terms of whether there are things, for example, we could put on the database that would help that benchmarking exercise. I have argued strongly against that because I do think it is so charity specific, and there are so many different, as we said, so many different types of charity that we regulate. Coming up with benchmarks which are appropriate, certainly across the sector, is a nightmare. I think you can potentially do it by different types of charity, and I would encourage you to work with your peer group, I suppose, in terms of what might be sensible benchmarks. I don't think there's any universal panacea, and a lot of it, again, in my view, is articulating the case well, I suppose, if I can put it like that. I mean, there has been this view that prevailed in the charity sector before, that if you are raising £1 of incremental revenue, spending £99 in actually achieving that is good. Now, there is clearly a public perception that you should not be spending an awful lot of money to get very little benefit out of it, because there's an awful lot of people who are deriving private benefit out of the £99 compared to the £1 of public benefit. And it's how you articulate that balance of public and private benefit, I think, is very important. And that's particularly the case, you know, if you're employing commercial fundraising organisations and things like that, because it is this very nuanced, you know, how much profit is being made out of people's charitable donations compared to how much the charity is seen.
Okay, thank you. There was a question over there.
Hi, Simon Bass from Prostate Cancer UK. I believe, well, it's a question with reference to SME and Ford. I believe there was a meeting last week with the Ministry of Justice. I wasn't there, so I'm relaying this second hand. Now, for us, legacy income is not a massive earner. It's about 2% of our income. But for other charities, it's much more significant aspect. And I think the worry is that if SME and Ford service or service equivalent disappears entirely, then it is an area where there's a high risk of not being aware of legacy income. And the question that was asked, at what stage does the fact that there might not be a replacement for SME and Ford become a matter of raising a serious incident reports on the Charity Commission? Because certainly the Ministry of Justice didn't seem to be aware of just how important it is to some charities to be made aware of potential legacy income.
I think that's a really interesting point. I also wasn't
Just going to repeat these.
Oh. So the summary was around SME and Ford, and at what point, if we don't get replacement to the SME and Ford service, do we report it as a serious incident to my committee, the Charity Commission? I also wasn't at the working party, but so again, this is kind of second hand. There has to be an alternative, because I think as an organisation, as a sector, organisations are heavily reliant on that information. So it absolutely has to come. They're reliant on it, I should say, for fraud identification, but also for financial planning as well. And potentially we may need to get the regulator
to help.
To help in that. There needs to be a solution, and it needs to be a cost-effective solution, in my view. Potentially this could be seen in some circles as a bit of a money spinner. We've only got one provider at the moment, and can they therefore crank the cost up? I hope that won't be the case, and the umbrella bodies are working with the large charities that have got big legacy streams and are very reliant on our service to try and represent our members and make sure that that's not the case.
And I have to say, I learned something new from this seminar in terms of that, so it's something I will certainly take back to the Commission. And I will declare an interest in prostate cancer. Not only do I donate to you, but I've also suffered prostate cancer, so there you go.
Look for the legacy.
Can I just say, not yet, okay?
And you are right. Oh, I don't think I should have said that. Let's do one more question, and then we'll have just time for input and networking for 10 minutes. So,
thank you. Michael Ellingworth, Account to Grow. Mindful of what Mike said about the championing of financial reserves and Jill's comments on establishing levels of reserves, what account should be made of a potential market and economical crash resulting in major devaluation of all investments, which have to be shown through the SOFA? It's only at a moment in time, but it could make a major impact on the viability of the business. At what point do you have to take it literally, and at what point can one be pragmatic?
So I think that question is about, a major drop in the investment portfolio obviously affects what the reserves look like and a knock-on effect of the reserve policy and how you sort of
and the viability of the business.
Yeah. Okay. So, Jill, do you want to start there? I don't know, Mike will further comment.
Yeah, absolutely. So I was at an interesting lunch yesterday with Saracens, the investment manager, and we were talking about obviously potential impact of Brexit, and I think at the moment it's very unknown. But what that could happen, what that could mean for kind of investments and investment holdings. And it kind of comes back to my earlier point, and I think that first slide that I showed around kind of what wasn't on there was where you are kind of flush with reserves and are investing them. A big part of that circle is investment policy as well. So working with your advisors around, can they attempt to kind of predict what's going to happen, and therefore what potentially could that mean for you in your strategy. So I think it's really a kind of wider conversation with that kind of longer term financial planning. And on to something else I touched on is adversity reserves. Are you overcommitting your reserves in what you're planning to do, or do you need in these times of uncertainty to hold a little bit back? It depends on your risk appetite.
The only things I would add to that is I think that market crashes tend to have a limited time duration. Accounts tend to take a long time to produce. Therefore, generally speaking, you can reflect, at least in the commentary, what has happened since the date when you drew up the accounts. Equally, I have to say, you may be faced with a situation that you've got a healthy looking position at the balance sheet date, but by the time you produce the accounts, your investments have fallen dramatically in value because of market circumstances. You should be commenting on that as well. The other point I would make is that I think it depends very much as to whether the charity is looking for an income stream from the investments in terms of what it is looking for in terms of dependency, or whether it is looking to short-term sell those investments in order to fund something, because clearly market value probably is not necessarily indicative, certainly immediately, of income stream.
Okay. Thank you, Mike. Thank you, everybody else. So the aim is we finish at 10, so we're going to have sort of last 5-10 minutes is just a chance to chat to any of the speakers or catch up with anybody else from BDO or your folk from Moore Stephens if you'd like to do that. So a couple of housekeeping things just to say, you've got a little assessment sheet, really helpful if you can fill that in. If you can leave that behind, brilliant. If you want copies of the slides, let us know. And can we just give just a round of applause to thank all the speakers, especially Mike for coming over.